Do you want to learn more on how to put money to work in regenerative food and agriculture? Follow our video course via investinginregenerativeagriculture.com/course or in the links below. Now, on to the podcast. Welcome to another episode of Investing in Regenerative Agriculture, investing as if the planet mattered. A podcast show where I talk to the pioneers in the regenerative food and agriculture space to learn more on how to put our money to work to regenerate soil, people, local communities and ecosystems while making an appropriate and fair return. Why my focus on soil and regeneration? Because so many of the pressing issues we face today have their roots in how we treat our land, grow our food and what we eat. And it's time that we as investors, big and small, and consumers start paying much more attention to the dirt/soil underneath our feet. You will listen to an interview about something many never consider, but we have discussed before when it comes to land with Thomas and Ian, ownership structures. In this case, it's not necessarily about land, but about companies, and especially mission-driven companies. Do we dare to ask the power question? Who controls the steering wheel of a company? And is that steering wheel for sale? Is it inherited? Or is it steward-owned? And how do we make sure that companies, especially impactful companies, won't turn into a commodity? Because what use is it if we all spend a lot of our time, sweat, energy and money to build amazing regenerative food and agriculture companies that get sold when they become profitable, while they still could have made an enormous impact for the decades to come? And now, without further ado, the interview. Enjoy! Welcome to the podcast. I'm Koen van Seijen, your host. Today I'm joined by Armin, entrepreneur in food, co-founder of the Purpose Network and impact investor. Purpose Network helps companies to stay independent and mission-driven for the long term. They believe that by innovating the way companies are owned, financed and governed, companies become more successful in the long run and can benefit all of society. Steward-owned companies make a legally binding commitment to their employees and customers that the company is not a speculative good or commodity, but a group of people working for a purpose. This all sounds extremely interesting and very relevant for the regenerative food and agriculture sector. So let's find out more. Welcome, Armin.
Hi, good morning.
So to start with a personal question, how do you end up working on ownership structures of mission-driven companies?
Yeah, I started several companies myself, and so I was more or less forced to think about ownership structures already very early on. And but there was one particular moment or one particular event that somehow pushed me to think even more about it. That was actually an employee of mine. So I founded also one company in the organic food sector and organic food for children. And my co-founder and I, we always told everybody, ourselves, our families, but also our employees, well, we're all getting up every morning to get children excited for good and healthy food. That's the reason. That's why we're working here. And one day, one of the employees of us came to us and said, wait a minute, is that actually true? Are we actually working for that purpose, or aren't we actually working for you both? Because you can monetize it. You can sell it. You can pass it on to your children. They can monetize it, etc. Aren't we actually working for your wealth? And that was kind of a provocative question, but we realized legally she was right. And I realized, without intending it, without wanting it, I had set up a legal entity that would somehow serve my wealth. And that was against my feelings and against my intentions, because we had this understanding of, we're working together. It's a project. We want to serve a certain purpose. We want to, create something great, etc. And that's what so many of the impact entrepreneurs somehow feel. They really want to change something. That's the attitude. And then you look for a legal form. You need to incorporate because you need a bank account. Very simple, and that's only possible with a legal form. So you look around and you probably choose a limited company in whatever form in whatever country. But in the moment of incorporation, something strange happens. Suddenly you're not anymore like the steward of this idea, the custodian, the servant who really helps this idea to life. But suddenly the relationship changes. The idea, the purpose suddenly serves you because you are owning wealth. You can sell your idea, you can destroy it. You you have all the rights that you have if you own, for example, this laptop you are sitting in front of now. So that somehow felt strange. And that's when I realized, there's something wrong. I have to look for different ownership structures to somehow make sure that we can all work really for a purpose here, and that I can remain a steward and don't become just a normal, shareholder, and in the future an absentee owner who just collects profits. So that was somehow the problem, that led me to thinking about these questions, and then also finding solutions and starting Purpose.
And it sounds extremely relevant and interesting. Can you make it concrete with some examples? I know you've been working in the startup space and you've been working in the slightly later stage, much more mature companies. Can you do an example in both of how do you keep this practical? How do you keep this workable?
How does it work?
How does it work? And some examples to make it concrete.
Yeah. So maybe before I give an example of a startup, I can give the example of my own company. So now with that problem in mind, how can we have a different ownership structures? I went around and looked for companies who did it differently. And I found actually there are companies who have been doing it differently for decades, even more than 100 years. And I collected a lot of them, and some of the brands are known, like John Lewis Company, or Bosch. Some are less known, like Zeiss or Dr. Hauschka. And I realized they all have found very interesting ownership structures, sometimes with a foundation involved in there, sometimes with a trust, that all ensure basically two things, two main principles that I became to believe that they are actually the core of really making sure that a company is steward-owned, as I call it, or you could also say self-owned. And so one thing that all of them make sure is self-governance. So they all somehow make sure the majority of the voting rights, the majority of the steering wheel, basically, of the company isn't a tradable commodity anymore. So the steering wheel cannot be sold. It cannot be passed on to children. It's always held in trust, basically, in hands of people who are stewards, who are really connected to the company, who are often actively engaged working in the company. And this can be made sure, as I said, by a foundation, by a trust, by many other different solutions. We can come to that later. And the second principle, besides the self-governance principle, is the principle of purpose that all of these companies, even big companies like Bosch, really adhere to. And that's, principle of purpose that basically says our entire endeavor, our company, is there for a purpose. And yes, we need to make profits, but profits are seen as a means to an end and not an end in itself. And what does it mean concretely? It means you are if you make profits, of course, you pay back investors, or you're paying even a good return to investors. But then the rest you are reinvesting, you're donating, and you are capping the upside for all stakeholders to make sure that that there's enough money being reinvested and used for the purpose. Now, these are the two principles that somehow all of these companies that I, and then later also a lot of other friends and colleagues, looked into, somehow implement. And that's what we came to call steward ownership. And now, how is that doable concretely in a certain situation? Let's say a startup. Let me give you an example of maybe Ecosia, the search engine. Ecosia is this great search engine that everybody should use because it's planting trees with your searches, and it's not tracking you, so it's better than Google. Has planted over 40 million trees in the meantime, and the founder could be a quite filthy rich man if he sold the company. Because he has more than 8 million users, and you can calculate yourself how many millions he would get if he sold it to, let's say, DuckDuckGo or Yahoo or whoever. He decided not to do that. He decided, I want to promise to the entire world, to all stakeholders, to my employees, that this is a company that's self-owned, that's steward-owned. That means I and also some others are stewards for a certain time. We cannot take out any profits for ourselves. we just have the voting rights, we just have, so say, the steering wheel in trust, then we need to give it back to the company once we leave the company. And there are certain succession mechanisms in place. So he promised that, and we designed his entire charter in that way that, now he holds only shares that have voting rights. But then there is a very important problem, because a charter can always be changed. You could promise this, and then the next day, once a big hedge fund comes along and says, "Well, we want to buy you for a crazy amount of money," you could say, "Well, wait a minute, I just changed the charter again." So we needed a security there, and we needed somehow a mission lock, and that mission lock we found in a golden share, or impact share, or veto share, as we sometimes call it. So basically, Ecosia now implemented exactly that structure. They said, okay, we have two share classes. One is for stewards. They hold the control, and they can do everything, but they cannot change their promise. They cannot fall behind their promise. If they want to change that, they need 100% majority, and 1% of the shares lies in a foundation. In that case, it's the Purpose Foundation, but it can be also any other foundation that has the right and the obligation to veto any attempt of falling back behind their promise. And this foundation itself has in its charter this kind of rule to veto these attempts. And in the case of the Purpose Foundation, it holds these kinds of veto shares now in more than a dozen cases. So this is one way, but there are of course many other ways to implement steward ownership. And you cannot believe what kind of effect this very hard legal commitment that you cannot roll back, that's the important thing, had when Christian, the founder of Ecosia, told this to his employees. That was such a magical moment, because people really understood, okay, he's serious, we're not talking just about it. So that it has an enormous motivational effect. It somehow enables people to, it fosters intrinsic motivation. That's maybe the best expression. It allows people to really be intrinsically motivated. So this is a startup example. Is that what you?
Yeah, no.
What helps you to understand, or did you want to hear something more from the investment world?
Oh, definitely. It helps to I think paint a picture that in the impact sector, and maybe in food, in the impact sector and agriculture as well, we often talk about impact, but maybe leave it at that. And things change. Companies change, interests change, personal situations change, and maybe at some point we find ourselves in a position where there's an offer or a lot of money on the table, like in many cases, or like the organic food movement now is being threatened by that, and it's very difficult to say no to that. Exactly. When there's a huge offer on the table. But when we maybe forgot to make the logical next step to actually make it a legally binding agreement to not change the mission. And unless you have that, there are only very few people that say no to, I don't know how many pensions and their children's pensions. And who's to blame if somebody offers 200 million or 50 million or whatever the number is for your company that you and all your colleagues worked for so long? The problem is it goes to one family.
Yeah, absolutely. No, I would say our human psyche is not built to resist to that kind of 100, 200 million offers. And we work together with entrepreneurs who actually have gone through that kind of internal processes, and that's super interesting. How hard it is, even for impact entrepreneurs. I can give you one example of a company that I shouldn't mention, but I can tell you it's a company in the tech space, and they got an offer by LinkedIn, one of the big companies. And LinkedIn started and said, well, 20 million. And they said, no, we're not interested. We are so mission driven. We do what we want to do because, etc. And then suddenly they said 40 million. And then they still said no. 60, they still said no. 80, they still said no. And then they asked them, what is there a price at which you are selling, or are you not selling, or what's going on? Because in the meantime, even the CEO of LinkedIn had spoken to them, and they thought about it and said, well, maybe, a 9-digit number. And then they said 100 million. They said, wait a minute, that's the first 9-digit number. That's not what we meant. Then they said, okay, then you come up with a number, because they really wanted to buy them, because they thought that is, we need that company. And they thought about it and said, well, maybe 120 million, they will never do this. This would be so crazy. Both founders were 23 and 26 year old. Now they are just a little bit older. And then LinkedIn said, no, that's not possible. But of course, 3 days later, they got a text message, we do 120. And they couldn't sleep at night, and they sat together, the founders with their employees. They calculated how much everybody would get, and then they thought, wait a minute, are we already done? Are we done with what we're doing here? No. An advisor had asked them that question, are you done? And they said, no, of course, we still want to do self-management, decentralized work, all these things that we're doing and continuing with our mission. And he said, well, then you can't sell. And then they ended up not selling, but it was such a tough process. The founder who negotiated with LinkedIn, he said, he had to meditate so often before he actually got on the call with LinkedIn. He had this text like by heart, that what he would say, etc., because it's so many forces inside you go crazy if you're saying to somebody, no, I as a co-founder don't want to have 60 million on a bank account tomorrow, and the other co-founder neither. What kind of, how many soul forces and psychological forces it's very difficult to imagine. And it's a very difficult technique that capitalism in that sense is using there, basically corrupting people, I would say, by these enormous numbers. And only the ones that are young enough, I would say, and internally strong enough can say no to that. And I don't blame anybody who uses the opportunity and sells. And as you said, especially one industry is currently under attack, and that's, of course, the industry. You're also working in the organic food industry and agriculture industry with all the pioneers who really wanted to change the world. And now, for years, nobody was interested in their companies, and now suddenly everybody becomes interested and wants to buy them. And but what's interesting there is, I think you have to make your calculation also with the customers. I don't know whether you saw that in Germany. There's this one of the largest natural care and natural cosmetic companies, Lagona, was sold to L'Oreal just a few weeks ago, and customer heard about it.
Of course.
And what you saw is customers were outraged. They were the ones who built that brand. They went to organic supermarkets and organic cosmetic stores for years over years. They
asked, where's this brand? I want to buy it. They built it. Yeah.
Where's this brand? They paid much more for that brand. They, were stuck in traffic to go to that one little shop in the corner of the city 10 years ago when it wasn't sold everywhere. So these were the people who were really, really fans of it and helped this brand. And now, once it's profitable, it's sold. So what you saw is actually a big shitstorm, and actually organic supermarkets letting customers vote whether they should throw it out or not. And 80% voted, yes, throw them out. We don't want to see them anymore. So it's interesting. I think we are getting into a time where it's important for your brand how you're owned. And if you're owned by a multinational company because you're selling to them, it will definitely damage your brand.
And so do you have an example in that? I know there are some, and can you talk about one or two for the pioneering companies that have been around for a few decades, especially in the organic space? I mean, you can see the ones that started, let's say, 30 years ago, and now a founder or maybe a management team has come to an age where it also starts to be interesting to think about pension and retiring, although the mission, of course, is still not completed. What do you do with a company that wants to transition to steward ownership? And how do you make that work also from the investor side of things and still sort of take care of the pension, maybe not with 200, 300, 400 million, but with enough to live comfortably for the founder? Yeah. A fair return.
Yeah. Maybe one good example there is organically grown company, OGC, in the US, Portland, Oregon. That's the second largest organic produce wholesaler in the US, I think. And with only 200 million in revenue and 200 employees. They were founded as a co-op by farmers already 30 years ago. And then they transformed to ESOP ownership, employee stock option plan, in the US, a very particular plan. And now they were actually in a very dangerous situation because first, part of the shareholders were, former farmers, former employees, so people who weren't anymore really connected to the company and who were interested in a pension. And then you had the ESOP plan getting close to 51%. And the problem in the US is in the ESOP plan, employees can't vote themselves. They just get the benefits. That's the pension plan for them. But a trustee votes, and the trustee is obliged by law to always vote and use his voting power to maximize profits for the employees. That means if he gets an offer, for example, by Amazon or
selling would be the maximum profit. Yeah. Wow.
He has to do it. He has to sell. You cannot get around it. And that's when they realized, oh, damn, we're in a very dangerous situation. Around us, all of the, organic pioneers are bought up by, 7 generations was bought up, that Whole Foods was bought by Amazon, etc. We have to change something. And they looked around and said, okay, we want to actually set up something like steward ownership. We want to make sure the steering wheel of the company isn't a tradable commodity anymore. And the other thing that they realized actually is once they went into this ESOP plan, a few years in, people started to behave a little bit differently because they had an internal conflict. They were employees, they were stewards of the company, yes, but they were also interested and they were also pension holders and investors. And sometimes that this conflict became apparent that they were actually thinking of the company as investors and not anymore as stewards. So that there was this strange thing. So they thought, okay, we don't want to have investors or employees as investors. We want to make sure they really can be stewards. And they looked for a good ownership structure in the US. And what they found is a very, very unknown structure. It's a perpetual purpose trust. That means it's a trust that unlike all other trusts, doesn't have any beneficiaries, any natural persons as beneficiaries, but it has a purpose. In that case, it's organic agriculture as the purpose. And it's perpetual, so it doesn't end. And they set this up, and now the question was, how can we get the company in there? And that's when they needed financing, and also a new kind of financing. They needed basically alternative buyout capital, alternative private equity and capital in order to buy out some of the old investors. And that's when we went in there and we negotiated with them. And the former owners, or some of the former employees and farmers said, well, we don't want the full valuation, we can be much lower, etc. And we found a good way. Some also basically exchanged their shares for a new class of shares, and it was financed through a mix of debt and equity. But the equity side, of course, must be very different, because if you want to make sure this, and that is now maybe the interesting part here.
Yeah, how do you invest in this without taking the steering wheel away again?
Exactly, without taking the steering wheel, because the usual way of investing, and that's what we all learned, you give money, you get power. Very simple. Money equals power. That's the equation of capitalism. So that's how investment functions. Now they are saying, wait a minute, you don't get power because the power is held in trust by this trust. So, okay, that's a hard pill to swallow for some investors.
It's super scary because basically you have to trust, literally, that the processes of the trust work to keep the company in the long run.
Well, yeah, exactly. And
also interesting for you, yeah.
But there are also other instruments that can reduce the need of only trust and it can give you a bit more security. But indeed, one important process is, can we make sure that the perpetual purpose trust, in that case, the steward owner has a good governance structure, and we help them to design that. It's a very interesting stakeholder governing structure. So both employees and farmers, suppliers that supply most of their crops yearly to OGC. They are considered stakeholders, and then they can vote people to the Trust Protector Committee. That's what it's called. But of course, we said, guys, we need some kind of other protections. We don't know whether because we are now holding shares as purpose. We're now holding shares, but what does it help to have shares with some dividend rights without any voting rights if you can basically decide whether you distribute dividends or not? So we need a certain security that if you have free cash flow, you're actually paying it out. So we said, okay, we're not interfering, we don't have any voting rights, but you should give us a certain security that once you have free cash flow, you are paying it out. At least in that case, it was 5% needs to be paid out, and then there's a certain waterfall. Then they can use the money to reinvest, help their farmers, help their employees, give them a little bit better flexible pay, etc. And then once that is done, we get even more return, 6%. And then there's a certain waterfall that we negotiated through. Basically, you have to do this thing then already in advance. The question of how do you distribute the money. And that gave us and also other investors who are participating in this 10 million preferred equity round enough security. But yeah, as you said, it's for some it's definitely still very scary.
Yeah, and that seems to be this is the way you're working, not scary, but you're advising, you're working with companies, either startups and larger ones to get them through that process, which is much more than just being the investor, but of course the governance structure and all the structures around have to be either invented or rediscovered, right. Like in this case, this perpetual purpose trust. And then everybody has to be comfortable with that and do it. So I imagine that's quite a lot of work.
Yeah.
And now you decided you have been doing this investing part with startups for the last years, and now you're working on a fund. Can you tell a bit more about that and what that is looking at?
Yeah, no, happy to do that. So as you said, over the last years, we invested in around 10 companies more in the startup space, companies that said, we want to be steward-owned like Ecosia, but we still need to grow. Can you finance us without us needing to sell our soul and our values, and without giving you a drag-along ride and voting rights, etc. So we did this, and this worked quite well. But we realized there are actually many companies in the more mature space, high impact companies, that somehow have grown, and that now, after years of successful business, they're thinking about succession and about long-term ownership plans. And some of them are very, very open to steward ownership. Actually, they want steward ownership because they say, well, selling it would potentially, undermine our mission drive and definitely our independence. I don't want it. I don't want to do a traditional IPO. I need something else, but I have the problem. My investors still need some kind of liquidity, or, my co-founder is crazy. He doesn't want to do that. He wants the highest valuation or whatever. So you have all kinds of obstacles in the way, and we said, okay, these people we need to be able to help. And there is nobody around there, no private equity fund that is actually helping basically to companies to set up foundation ownership, steward ownership.
Alternative buyout capital, like you mentioned it before, which is super alternative, obviously. Yeah.
Yeah, it's not really there. And that's when we said, okay, actually we need to set up a special vehicle that can do that. And that's when we sat together with the GLS Bank, that's the largest sustainable bank in Germany. We talked with them about it and said, okay, that's a very good idea. We want to support that. And we found, and then one of the guys, Daniel von Moltke, who was the co-founder of the Traders Organic Growth Fund, that is, as you probably know, also an evergreen fund, but that's not really focused on these ownership structures, and it's actually not able to invest in these kinds of ownership structures, as we found out. In one case, we even, this is another story, we had to buy them out because they were blocking it. But that's, as I said, another story.
For another time, yeah.
For another time. But so Daniel von Moltke joined us, and we said, okay, let's set up something that we call now Purpose Evergreen Capital. So it's an evergreen structure. It's not a typical fund. We got an exception from the German regulators that we're not regulated as a fund, but more as a holding company, because it's more a holding.
Because otherwise you would have your 10 plus 2 maybe, but who knows what's happened in 14 years. You'll be
exactly
structured completely opposite to the way you're trying to invest as an alternative buyout fund. Yeah,
exactly. We want to be able to think in the long term, to invest in the companies, and if we want, stick around, if not, go out again, but not have this kind of pressure, because that kind of closed-end fund structures, as you mentioned, is one of the reasons why we're selling companies again and again and again, and why they can't just be in calm waters and have a long-term owner. So we said, okay, that can't be the structure. And now the structure will be, as I said, evergreen. That means liquidity for investors is achieved through a secondary market and through buyback windows, yearly buyback windows. And the secondary market is organized by the GLS Bank. And the fund, obviously the fund has to be of a certain size. We said we're going to start with a more smaller size with 35 million now. And that means we can all the investments we have to do as co-investors, because even such an OGC deal with in total 20 million needs, of course, much more. But that's also what we like. We like to convince other investors and help them to understand these kinds of steered ownership models. That's also what we see as our pioneer role. And we also help our investors to co-invest then in our portfolio companies. And the fund basically has this aim of, helping some lighthouse companies and helping high impact companies that want to make sure they can stay on mission, they can stay independent, and really make sure their values are enshrined in the charter, help them to do that. Because otherwise, I think, we somehow lose a lot of what we've built, because, so many impact investors and go in, measure, make sure the company makes an impact, and then they go out, and then what? I think that's like a loose end. We somehow need to think through the entire life cycle of a company, and we need to make sure that the years in which the company is big and is particularly impactful, these years don't become the years of selling out and of losing your mission, etc.
So a company reaches this certain size of maturity, etc., and that's when it's achieving the most impact, and that's also often when it's actually being sold and thus not achieving anymore. So that's the fat years for the impact.
Exactly, and that's when it's undermined. Yeah, and then you can say, well, come on, there are also buyers who are nice and who will make sure.
And you create a lot of capital for the founders that probably have a certain set of values and might invest it interestingly as well. Of course, there's a second part to this.
No, that's true, and I totally admit there is a trade-off.
Probably some of your investors in the fund now have maybe sold a company at some point and are now able to do that. Yeah, exactly,
and I don't. I think that is totally legitimate. For you just have to make the trade-off yourself. You have to think about it. And what's more impactful? Is it more impactful to sell it and then have the money and do something with it, or is it more impactful to have a company that is that can stay true to its value? A lot of employees that won't, get under the wheels of a new regime of investors who are really short-term interested, and etc. Suppliers, because sometimes I think you're misjudging this by only looking at your company, but your company is embedded in an ecosystem, and it has a tremendous effect on the entire ecosystem. I can give you an example from the organic food industry. So again, this Logona I mentioned, it's a very interesting case, because the founder of Logona, and Logona, I don't know, I think it's only a 60 million revenue company, but still it's an unknown brand in many countries. the owner thought, okay, I want to get out. I sell it to very value-aligned investors. And there was a group of investors who said, yeah, we're super value-aligned. We want to keep it independent. It's nice. Thank you. Here's the money. What happened? Just 2 years from then, they sold it to L'Oreal, which is partly owned by Nestle, 23%.
In 2 years, their whole values had changed of the investors.
Yeah, the entire game changed. And now what happens in the industry is that they are, of course, applying different sales techniques, the organic food sector has this different way of I would say, dealing with each other, more cooperative, not as hard as you're not suing your competitor the whole time, etc. But now we're getting increasingly these companies that are owned by the big multinationals in that space, and they're behaving completely differently. They're not anymore bound to that implicit contract, basically, that implicit cooperation contract that all of them had. And it destroys an entire ecosystem. So it's not as easy to just say, well, it's just my company. I think it's, there are many, many, many things connected to it because we're living in a complex system and complex world.
And I want to be conscious of your time and end with one final question. If you could wave your magic wand and change one thing in the food and agriculture system from the sustainability point of view or from the long term, I mean, that's pretty much the same. What would that be?
So one thing in the organic agriculture system.
Also the food system. And the cosmetics obviously should be all derived from natural ingredients, should be all coming from natural ingredients.
Yeah, absolutely. I think I would make sure, so the one thing probably most impactful would be to have a law that basically makes farmland steward-owned in that sense. So everything that I was talking about, companies now, that for land, and that's very simple to do that by law. Some countries have that already, helping making sure that this land can only be held by people in trust as stewards and doesn't become a speculative commodity, what we see often with enormous prices, etc. So I think that's what I do. And if I had another wish free, I would then say, okay, then we need a legal form for these food and agriculture companies that makes steward ownership much more simple, also as a company.
Because that's what you see often, right? It's very difficult to do and you have to jump through all kinds of hoops and come up with creative ways for something that should be so much more simple and straightforward.
Exactly. It's a natural need, but all of the legal forms for land, but also for companies, both, are somehow designed for a different system, for a different age. They were designed when, capitalism was really just starting, and it was all around making profit. And now we have entrepreneurs and people who think profit is necessary, yes, but it's a means to an end. But all the legal forms are somehow still from these old times. So yes, it's super hard to do it differently. And I think my example that I gave from OGC and from others can show a little bit how somehow strange and also difficult it is to convince other people to understand it, etc. It's a big thing, and that's why a new legal form would make it much more simple, because you have then an understanding and you don't have to design around with hundreds of different new forms that nobody knows.
Is the B Corp movement in some? I know some countries or some states have it as a legal entity now, but is that falls in the same direction, or it's part of the same movement?
Isn't this? Yeah, I think the B Corp movement is it's a great movement, but their main aim is to enshrine certain purposes and values into the charter. But they are not asking what I would call the power question. Because steward ownership is asking the power question. Who has the power in our companies? Who has the power in organizations we're all spending most of our times in? Are these people who can buy the power? So is this money? Is the principle of money? Or are these people who just by chance inherit the power? Is this the principle of blood, or do we have another principle, a principle of purpose or stewardship, that someone makes sure there are always people that are able and values aligned, ability and value relatives, so a different kind of family, so to speak, that are getting the power there. And that's that deep power question. That's not really what B Corp is interested in, obviously, and which is totally fine. But that's why I think it's still necessary to go beyond B Corp.
Yeah, and I want to thank you so much. I will definitely link the interview I did with Thomas Ripple on farmland and also the Agrarian Trust I did on farmland investing and farmland commodities and speculation below in the description. I want to thank you so much for your time. I know it is one of the most busiest weeks you have in this year. With the fund, with a lot of other projects and a big conference coming up. And there's much more to discuss, but I'm looking forward to check in again soon and discuss more on this often forgotten part of the power question and dive deeper into that.
Thank you, Koen.
Thank you for listening to this interview, and I hope you learned something about an often forgotten subject, ownership structures. So next time you are investing in a company, or next time you're starting a company, or next time you're taking over a company, dare to ask the power question. Who is controlling the steering wheel? Not the most sexy subject, but definitely crucial. Thank you for listening all the way till the end. I hope it was interesting and relevant to you. Dear friends of the podcast, I'm super excited to share with you the online video course Investing in Regenerative Agriculture and Food. How to put money to work in regenerating soils at scale and growing a lot of tasty food while doing it. Why are we doing this course? After 100 interviews and more than 100 hours of audio asking the question how to put money to work in regenerating soils, and have been following the space since 2011 and recording this podcast since 2016, we thought it was time to share our lessons learned. What have we seen in the space over the last years? How have we built our decision-making framework? What to focus on with the podcast? How have we picked interviewees? What questions should you ask? What is happening in the space? What should you read? What should you listen? What should you watch? How to approach this space? For whom is this course? You, the soil builders and investors in this space. The soil builders, people working in this space, entrepreneurial farmers, fund managers, vehicle builders, crowd investing, platform builders, agtech companies, farm-to-gut food companies, permaculture, keyline designers, holistic management consultants, etc., etc. People that are building soil at scale. And the investors who are putting their own money to work through their family office or as private individuals, or people who are putting other people's money to work through foundations, institutional capital, banks, insurance companies, etc. Is this course free? No. This is pay what you think it's worth. Meaning, I have no way of knowing what this course will be worth to you. And I'm very aware that among the listeners of this podcast, we have people with very different means. So I'm inviting you, if this course is creating value to you, and if you have the means, to consider paying what you think it's worth. Thank you. So what is this course? It's currently a series of 17 videos, mostly ranging from 10 to 15 minutes, plus PDF slides, so you don't have to ride along. We're going to look into why invest in regenerative agriculture and why extractive agriculture is so risky, how to invest, what kind of frameworks you could and I think should build, what to invest in, what kind of co-investors you could find, or what kind of investors you could find if you're a soil builder. Every lesson will have a digging deeper part where I will share what kind of reports, what kind of interviews, what kind of videos you can look into if you want to dig deeper. We're going to look at nutrient density, landscape design, and a lot more. So what is it not? It's not a list of investable deals. Unfortunately, that doesn't exist in this world. We're really at the beginning of the regenerative agriculture and food revolution. It's also not investment advice. Before making any investment, please find professional investment advice. So get ready, get a cup of coffee, a cup of tea, or whatever you're drinking. Click on the link below, sign up, and I'm really looking forward to your feedback.